Hey guys, what's up? Well, I'm thinking about doing a weekly portfolio review if you guys want me to go over, if you have any questions for me, or even do a little bit of TA. I was thinking that that could be a interesting event. I'm not sure still what time would be best, but we're gonna figure that out all in good time. Let me know how the quality is, guys, and if you can go ahead and ask any questions you want right now in the chat box, that would be perfect. And all the while, I will start trying to make this better. Alright, guys, I'm going to start going over some of this stuff. If you have any questions, please feel free to let me know. Alright, check it out. What I'm looking at, actually, the first one I wanted to look at was TECL. I don't know if you guys are familiar with this, but this is an interesting one if you are looking for something, some long-term holds. This is the first one that I was actually looking at today. But since the coronavirus dip, I mean, this is setting a really nice trend. And I really think this is a good time to buy. Not only because it's dipped down in the last few days, but every time it's down this low at one point, it usually tests this resistance and pops up, except for one time, which was in it was the big dip from during the run up to the elections. So I think this would be. I still think this is a really good buy, and this is a 3x, so keep that in mind. But Also, another one that I would recommend is SOXL, which is down to down almost down $150 actually. So this one could be good too. This one I could see going down a little bit more, but it's really taking a beating, especially these, and those are a lot of what my long-term hold portfolio was made up of. But this platform is Webull. Thanks for tuning in, guys. This is the first time we're doing this, and again, I wanted to say that I want to make this a regular event. Try to do it once a week, either right now or, but we can talk about it later. But either right now or possibly it'll be Sunday night. So maybe that would be better for everybody, and for me, it doesn't really matter. Both of those would be fine. But on Sunday night, usually I try to do um, the analysis, what to watch out for in the week. But I'm gonna try to do both of those if the time works out. But anyways, yeah, this is Webull, and if you want to open a new Webull account, hit me up. I recommend Webull. Robinhood is easier to use, but especially with those recent events of Robinhood. Although Webull is not totally innocent either, but still Webull has nice charting. Robinhood, you can't do anything like this. But anyways, I would like to do this. For me personally, my setup, let's go ahead and look at Tesla. This is an interesting one that I've been trying to pick up more of. And right now it is in my buy zone. We'll see what happens with this. I bought some shares at $800, so that always felt good. I didn't buy enough. Actually, I thought I bought 45, but turned out my limit order was only for 25, 35, I believe. But nevertheless, it's in my buy zone. We'll see if it drops any more on Monday, but I'm looking for a nice little bounce. Before, when it's come down this low, it has bounced back up. It usually isn't getting out of this channel, at least since the beginning of November. Webull's not available in the EU. Yeah, you know what? I was talking to one of my friends today. They use eToro, which is really interesting, but that's not available in the US, so it's tough. Isaac, where are you from, man? From the UK? But I see a lot of people there use the 212, so I'm not really sure what works best for you guys, to be honest with you. But I get a lot of people asking me which platform they should use, and you know, it's hard for me to recommend something other than Webull or Robinhood, even though Robinhood kind of sucks. But you know, it is what it is. There's really no good broker, to be honest with you. But if you're into crypto, you can actually buy these stocks. They're tokenized. A lot of the blue chip stocks and the popular ones, they're tokenized now. Um, so you can actually go on FTX, or pretty sure it was FTX. But there's one exchange now, mostly a derivatives exchange, but you can buy using crypto. So that's really interesting, especially you get some guys that are from countries where it's pretty much can't find any broker to invest in stocks, which I do get those questions a decent amount of times. But yeah, now a lot of them are tokenized. Ireland, yes, I wanted to move to Ireland at one point. Beautiful country. But anyways, let's continue. So I just want to show you guys my basic setup and see what's good. But yes. Anyway, so if we can, I don't know what you guys experience with charting, but of course, I get a lot of people asking me what's the best, um, how to get started with charting, or what resources, and it's really hard. First of all, I'd like to say, and you go ahead and comment what your experiences with the technical analysis and the different charting. Also, let me know what your favorite methods are or any questions you might have about that. But I mean, there's no right answer, and really it's going to be what you're most comfortable with. Um, to gauge where you can find a better buying and selling position, it's not going to be, bulletproof. It's not going to be able to predict the future, no matter which methods or which guru you listen to. Technical analysis is only should ever make up 5 to 10% of your research and your studying for the markets or whatever. Should be the least amount that you do. I only ever use it to gauge better buying opportunities or selling points or like the targets. So I'll use them for those type of things. Um, but I don't trade solely off of the technical analysis. And I've said that a few times and get some hate on that actually, but that's just really silly. I see a lot of new traders, and I've been doing this for quite a while. And I used to be really into the TA, just draw so many lines, and at the end of the day, it doesn't matter. And like I said the other day, if you're doing some charting on Facebook or Amazon or Tesla, it doesn't matter what, and there's some event that happens, maybe Amazon's earnings dropped, 50% a share, just super bad, or some new report came out, or anything like that. There's no amount of lines that you can draw on the chart that's going to predict these type of moves. So it's just really silly. Like, there's no lines that can predict how many Teslas or Neos are going to be sold next quarter, which those are the type of things that's going to affect the price targets more and the price action. But anyway, so like I said, so I just give you this for example. We see that it's going in this upward channel. Sometimes it's a little bit below, sometimes it's a little bit above. But overall, since November, it's basically stayed in this bullish channel. So that's just the first thing I looked for, tried to find. But that's just really simple. And then we can see if we zoom in, right now it's on the lower part of this. So just going off past performance, which, by the way, doesn't indicate future performance, but it's at least something. And so I think since it's hitting this support, this could be a good buying opportunity for Tesla. And sure enough, I did buy some at 800, and it is a little bit further down, which is fine. Because if something like that happens, you just dollar cost average. And if you don't know what that is, it is, let's say I wanted to buy 100 shares of Tesla. So one day I would only buy 20 shares. The next day you could buy 20 shares. The next day you could buy 20 shares. And over the 5 days, you totally would have bought the 100 shares. So that's just going to give you an average price. No matter if it's 800 this day you bought some, and then 780 the next day, your average price is 790, because we cannot time the market. So most that's like the most important advice that I would give you. Always dollar cost average, no matter if you're buying or selling, because no matter how many lines we draw on this chart, it's not going to be sufficient in predicting the markets. So this is just a zone that we can buy in, but let's look at something else. Um, and if you guys want me to do an analysis on any ticker, just go ahead and leave those in the comments, and I'll do that. But let's go ahead and take a look at NEO, because that's a pretty popular one right now. Also, let me know in the comments if the quality is okay. This is the first time I've done this, and I just downloaded some software. Literally my first time. I don't really know what I'm doing, but I'm not really a tech kind of guy. So let me know how it is. Anyways, let's take a look at NEO. This is a little bit more complicated one that I've done. I have the Fibonacci on it. And I wouldn't always use Fibonacci, but it seems to be in a pattern, in the Fibonacci pattern right now. So I just went ahead and started drawing it from this bottom to this top. And that's the 0%, and this is up to the 100%. So that's what it's going to look like if you draw the Fibonacci. And then the Fibonacci lines will keep going up for any future price movement. But as you can see, sometimes it stays in in the Fibonacci. Sometimes it can go a little bit out of, but it eventually goes up to the next level, and that's sometimes you can gauge it. Like this one was a clear bounce off, and it went down to the 50% line. But, that's just something I'll look for. But even we can. Usually, I don't use that. Let me delete that. But also the Neo, it has a nice bullish pattern too. We could draw a parallel on this. This one looks like a trend, and this is all, you guys do your best what you think works for you. There's no one right answer for this. Um, but really, it's just going to do your best. And let me go ahead and go over the indicators. Right now, I have the MACD, which you guys probably know. And again, I don't know what your experience is with this, so you're just going to have to let me know. But also, I like to use the super trend lately, and this shows just overall if it's in bearish or bullish. And the screen line is the super trend. It is clearly in a um, bullish trend right now. But we could go over to one other popular one. And this one is pretty crazy, AMC, as you can see. So basically, if we take a look at this, AMC, once it went down, this was in December 14th. Once it went, it hit this on December 14th, and then the super trend flipped over to bullish. So this green line, here's the change triangle, and then it started going in bullish. It's a red line. So basically, that means it's either going to be bullish or neutral. Don't buy it. And this is just according to the indicator. And then once it flipped, and here we saw it started going up, and this is usually a pretty good indicator. But of course, nothing is 100%. So here it started, as you can see. Let me switch to the 4-hour. Yes, so here it finally started going up a little bit, as you can see, and then it flipped over to the green line, which is the bullish. And so that would be a recommend buy. And sure enough, that one paid off. But looks like on the 29th at 2:30, it flipped back over to bullish. That would be where you would have sold if you were paying attention, but of course it cannot time the top. So I mean, if you had if you want to do some real like day trading, or over a couple of days, go off the super trend. It could be interesting. So if you had done it exactly, we would have bought it at around $2.20. Let's just say. And then when it flipped over, you would have sold it at about $9.75. So I mean, you would have made some decent money. But that's just one example. Let's see. Great quality. I think you've been bearish since December. Yes, I probably did. I probably misspoke, so I apologize about that. Let's see. So if you guys want me to do for those of you just joining, I want to do a portfolio review. If you have some recommendations about portfolio, let me adjust this. Please go ahead and leave that in the comment. I think that's better. I think just go ahead and do like whichever asset or ticker, and then go ahead and let me know what percent of your portfolio. I think that is better. So don't say like a dollar amount, it doesn't matter. But you could do a percentage or something like that if you want me to give my input on that. Or if something you're thinking about buying or any questions you might have, we can go ahead and look at those. Ticker wise, or it doesn't matter. All right, so let's continue. So anyways, you would have went from 2 to 9, 220 to 9. I mean, it can be interesting. Another one you could do, let's take a look at it a more normal one. Let's do one that probably nobody wants. It's Chevron. Oil and gas is not my thing. It's kind of dinosaur, in my opinion. But this one has actually gone up a decent amount. I usually like to go on the day candle chart because I don't do so much of day trading inside of each day. Sometimes I would, just depends on how much my options have gone up and if it hits my target sell, which they can move really fast. But nevertheless, I don't really do so much of that. But anyways, I usually trade on the day candle chart because it just gives me a nicer picture. Um, I like short midterm trading the most, and my favorite is, of course, just long-term hold. But anyways, looking on the day chart, we can see that this stock, Chevron, hit the lowest of about $50, and this was in March. That was coronavirus low. And currently, when it hit this, it flipped over on the super trend. It flipped over to bullish. So we would have bought that. We would have bought it around $72, let's just say. And then it flips to bearish at 97, so we would have made some money on that trade. And as long as it's bearish, don't short it or anything like that. It's too risky, although you could. But I wouldn't recommend that. Unless you're very sure that it's going to be a good short. Personally, I wouldn't do it. For me, the bearish, the red line super trend, I would just not invest in it. And then, anyways, so then it went down to another low of about 65. Started coming up, which is interesting. It's very interesting because even right here in beginning of October, it started coming up here, but it did not flip the super trend. Although here at the end of October, for some reason, it flipped the super trend and then it kept going up. So if we would have bought, I don't know if we would have been able to have bought right here on the 6th, or if it would have been the next day, which it just gapped up really a lot, actually. $79. So worst case scenario, we bought at $79 and we held it all the way through until it flipped back over to bearish at 88. So we would have made money too. And this is on the day chart. So if you guys are into day trading, midterm swing trades, I think that the super trend, and it's worked for me. And as you can see, you can do your past history. You can check it out to see if the super trend has been accurate. But it's a nice little indicator. But keep in mind, this is not 100%. Sometimes it's going to lose, and I'm sure if we went through some examples, we could find some times where it would lose. Let me pause for a second and check and see if anybody else is coming. Oh, maybe not. Oh, nice. 9 people. Welcome if you're just joining us. Leave a comment in the chat for any tickers you would like me to do a TA on, any questions you might have, and also if you want me to do a portfolio review of yours, you can let me know which assets you have by ticker symbol and what's the percent of your portfolio that you own for those assets. All right, let's go back. Excuse me. All right, let's see. Let's go ahead and go over the good old watch list, what we had. Some more interesting ones that are down right now. I organized by the ETF index, and then my 3X ETFs I really like. But those are just taking a beating right now. But anyway, so these are some index you guys can check out. I highly recommend the ARK, WRGRF. ARK-G is very interesting. I want to buy some more of those actually. The genomics is going to be very good. Or just the good old QQQ or TQQQ, triple Q. That's always a winner if you're bullish on tech. All right, some recommendations coming in. First one is Disney. Let's do it. And remember, guys, this is Webull if you don't know. So if you want to follow along with me. Alrighty. Let's take a look at Disney, see if it's good to buy. Looks like I had already done some charting on this when I wrote the write-up about Nancy Pelosi. So if we take a look at this, it is in our buy zone, which is interesting. I had made the buy zone for this gap. So if you see that, it's this gap. So I would have waited to fill this gap. Good old Nancy Pelosi is losing money right now. I can tell you that. I think she bought it on the 22nd. Sucks for her. It's only down a little bit, but she invested quite a lot of money. Or her husband or whatever. Doesn't matter. They're both in the same boat. But anyways, Disney is just flipped over to a bearish trend on the super trend. 180-day moving average, it's still above. Those are the two main things I use. I look for any gaps that they're going to fill. So you can see on the December 11th, it just jumped up. And if you want to know the reason why it jumped up, you'd have to go back to that day and see what's going on. You know, what was the news that day. But this is interesting. Let's take a look and see in the past history if the super trend is accurate for us. So right here, flipped over on the August the 5th. We could have bought it at open, maybe if we're lucky. That's just best case scenario for 123. And then right when it flipped back, 127. So we would have made a little bit of money. Of course, be careful on options because there is the gamma time decay. So that would be risky. And then it flipped over to bearish, turned back to bullish around. That's interesting because there was a gap up here as well that never got filled. But let's see, bought it for 127, and then we would have just recently sold it for around 168. So I think I always like this indicator. Of course, it's not foolproof because here, if you had an option contract, it would have been decaying over this time period. Before that, looks like here we would have made a little bit, but I don't know if the decay would have been enough, and it would have not been enough to affect it. But of course, you'd have to look at that, and it depends on how long the option contracts are. But nevertheless, let's see if we can find something else here. It's really bullish since the 11th. Overall, if you want to go in Disney long term, I think there's no problem with that because it's just a powerhouse for the movies and Star Wars now it has. They're never going to stop Star Wars, it seems like, and that's great. I'm a Star Wars fan. But anyways, in the buy zone, I would go ahead and check that out. I did a report on this. You can go back in the article and see this exact chart. Oh, here's my target. 205 I set a target at. Yeah, I think that looks pretty good. It could be a good buy right now. Buy it for less than 165. Yeah, I feel pretty good about that. I wouldn't put so much money in Disney though. There's other things that we could use the capital for. I mean, you could do a long-term option like a leap. Um, could be interesting to save your capital. But otherwise, there's better things to do with the money you have available than Disney. This is my opinion. All right, next one. Could you take a look at Palantir? Yes, I can. What's the ticker for this? Yeah, there we go. So this one is good. This one is overall good. Overall bullish. Because this is an ARK baby. Good old Kathy Woods. She is buying this up for her funds. This is a good one to be in right now. Well, it would have been even better to have been in it before. But if you want to take a read here. But anything ARK overall, I would say, is a buy. But to be honest with you, even better is just buy the ARK ETFs. And if you don't know what those are, look at ARKK, ARKQ, ARKG, all of those. But if you guys have been in this a little bit, then you probably know the ARKs. All right. Oh, that reminds me to look at the options for Disney. It can be an interesting play. But anyways, Palantir's super trend has just always been bullish. There's no 180-day moving average because it hasn't been listed for 180 days. So all we're taking a look at is at the super trends. It's still bullish, so I mean, you could always wait until it switches to bearish or neutral on the super trend and then wait again for it to come back to bullish. That's probably what I would do if you just want to swing trade on the indicators. But if you're willing to go a little bit longer term, now I don't know what you want to do. And this was a question by Tom Tim. I'm not sure what your goal is or how much capital you have available, but the long-term options is the safest thing to do. Any short-term, you're going to see a lot more gains, but it's risky. Taking a look at the options, I wouldn't recommend 6 days unless you want to gamble a little bit, which there's nothing wrong with that, but just do that with a little bit of money. But the Palantir, I mean, I would do it. I usually like to do around 2.5, 3 months, just to give us a little bit of time, so that gamma's not very much. But you could get a in the money option with a delta of 71 for, it's going to be expensive. It's $970 to get in that just for one contract. So, I mean, cool. Is that right for the implied volatility? 11,000%. Damn, that's pretty. Oh, 113%. Come on, Weeble. Get with it. You scared me. No, anyways, 113%. That's a little bit high. Safer is around 30. But basically, what that means is it could change 113%, like it could go down. So just be, when you're considering the risk, consider the implied volatility. Better is less than 50, I would say. I mean, it's hard to find less than 30. I mean, what are we doing if it's less than 30? Just buy common stock. But the delta is 71, so basically one contract of this, which keep in mind costs about $970, would be the equivalent of holding 71 shares of Palantir. So you're going to save a lot of money, because if we pull out the calculator here real quick, I'm just going to do this on my calculator. Let's see, how much is Palantir anyways? Current price $35, let's just say, times 71 shares. So if we just bought 71 shares outright, because the delta is 71, so that's $2,485. Now if you buy an option contract, you're getting exposure to the 71 shares because the delta is 71, and it's only going to cost you $970. So you can take a look at that, but I would personally recommend something like 3 months out or more, at least. The further you go out, the more expensive it's going to be. But really, guys, you're going to have to make your own decision on this. It can go up. It's pulled back right now. I might recommend maybe this little gap. Fill that. So what's that, around 33? Maybe 33 would be better. The safest thing to do, because this is a volatile stock, the safest thing to do is wait for it to turn super trend bearish, and then go ahead and wait for it to flip back to bullish before you do it. You might miss out on it, but that's okay. There's a lot of stocks. All right. Keith McAndrews, you got in at 110. Oh, for Disney, huh? That's thinking nice. That's some nice profit. You're beating Nancy Pelosi. Option trading and how to know when to do it. Yep, for sure. Really, it's just going to be how much capital do you have, this, and how much risk do you want to take. The less risky is just buying the underlying, just the regular old Disney stock. That's the less risky. And then that's going to be the most expensive, because you're going to need all the money to buy all the stocks. Then the next step up would be the leaps. So that's over 1 year options. Those are safe. You can get a high delta, which is exposure to the stocks, the underlying, just like what I went over. And that would require, for the Palantir, was like $2,400 for 71 stocks. But if we got options with a delta of 71, then it's only going to cost $970. So but you'll get the same exposure. So my point is, you only need to use $970, and you get the same exposure as $2,400 of just buying the common stock. Obviously, there's more risk with options though, but pretty much like that. And even less, like really out of the money, is even cheaper, riskier. But it really just depends on how much capital you want to use and how much risk you want to take to make the reward. That's really how you make the decisions. I'm trying to build some more quick capital. I've gotten lucky a couple of times for some quick cash, trying to build 25,000, trying to build to 25,000 from the 4,000 I'm at. Very nice. Well, that's totally doable. I mean, that's only a little more than 5 times. It's totally doable. You should be able to hit that in 6 months if you really do due diligence every single day and put in work. You should be able to hit that. Just diversify though. You already have 4,000. You don't need to take any risks. Sell some covered call. For example, solo. I always talk about this, but that's the safest thing to do. Sell some covered calls. Collect your premiums every month. You could do 20, 30% a month, legit, without so much risks. and that's just steady income for the collecting the premiums from the covered calls. If you don't know what I'm talking about, let me know. You don't know what I'm talking about, I can show you how to make a steady 20-30% on selling covered calls. But this is so overlooked though because it's not as sexy as making 500, 1,000%. But it doesn't matter. I'm happy with 20-30% a month, guys. I mean, get out of here if you're not happy with that. But if you got 4,000 in the bank in your account, sell a couple covered calls. You're only going to need 1,000, 2,000 to do that with, and then the rest you can diversify out into in or out of the money calls. That would be my advice, and you can hit the 25,000. I usually give advice that people you can start considering doing this more full time if you're at more than 100,000. And it depends on how old you are. Obviously, you need to think about retirement and stuff like that. But because 100,000 is not enough for that. But if you're starting out and you're young, hit the 20,000, 25,000, hit 100,000, and once you get to 200,000, think about getting a house, and that's all paid off. And that would be my biggest advice for you guys from my experience in my investing and for my personal life with finance and stuff. That's the goal to work for is a house paid off, so you have somewhere that you don't have to worry about to trade in and do it full time. 100,000 again. Just keep doing it, and take out a third and put it in real estate once you build the profits up, which we're gonna do, guys. I post on Twitter every day. If you guys don't know, check out the link in the description. I post my real live trades on Twitter. Probably most of you guys are coming from there. Or Reddit. I also post a lot of write ups. Check out my website. It is um, prostockadvice.com. That is my website. I post my daily write ups there and my watch list for all of the stocks. You'll have some really good ideas if you're looking into everything I post on Twitter and my write ups and everything like that. All right, let's move on. CLSK, the microgrid company. This is interesting. CLSK, Clean Spark, huh? Let me look into this one, guys. And this is a question by Olu Ayo. I don't know if I pronounced that right. Where are you from? Olu. Anyway, CLSK, huh? Let me read this real quick. CleanSpark Inc. operates as a diversified software and intelligent energy services company. It offers software and intelligent controls for microgrid and distributed energy resource management systems, strategies, design, and services. Renewable energy. This is an interesting one. I like it. Based in Utah. Utah's a nice place. All right. It's in a bearish trend right now. This is just my first thoughts on it, guys. This could be a good pick. Clean energy is good. I know Reggie is a good one I was looking at. Of course, ILCN. Yep, this one's interesting. It pulled back since 42. I'd have to look into the reasons why it's pulling back. Unless they're all just pulling back. Let me check that really quick. Yeah. Go ahead and add this to my watch list. Thanks for all the information. You're welcome, Keith. You're welcome. Tom Tim, 24. Congrats, man. Congrats on being young and sticking with it, man. That's what you got to do. Just keep grinding. You're going to have some days that you lose, and you're going to have some days that you win. Just stick with it, man. This week specifically has been a pretty hard one for me, but I'm okay. We're okay. What goes up must come down. And then it keeps going up more. All right. Excuse me. So this is in a bearish trend. Okay, so anyways, overall, bullish on renewable energy, clean energy, anything like that. I think this one is interesting. Analysts are saying buy 100%, but that's only one analyst. Their price target looks around 24. And this is the research on Webull. This is free for anybody that has a Webull. Go ahead and get a Webull, guys. It's better than Robinhood. It's legit better. Robinhood is just so, I mean, I'm not going to lie, I kind of miss Robinhood, but I like their graph. But anyways, Webull is better. Any news coming out on this? A little bit. It could take some time to go in on this deeper, really. Some leaps on this would be less risky. How much are they going for? $1,300 or more. 1,200 maybe. $50. That could be interesting, but that's doubling. Most analysts are 24. I mean, it's hard to say. To be honest with you, this one's hard to say. Let's check out the super trend before. Going down, going down, going down. Here it went up, switched over to bullish. Would have made some money on that. Bearish here, finally. Switched over to bullish, would have made some money on that. I mean, to be honest with you, wait for a consolidation. Possibly look in here. I know that's a little bit broad, but wait for the, let me just draw this line, this super trend to start coming down here. Once the super trend comes down here and then the price meets it, then it should flip over. And then it could be a good time because the last one, two, this one would have made money, but the last two have been pretty accurate. And these are indicators, guys, and remember, these are just lines we're drawing on a chart. They don't really mean anything. They're just helping us find a better price entry point. That's all, really, and selling targets. Yeah, this one is a little bit risky, I would say, because that's pretty volatile, to be honest with you. But overall, it's bullish. I would give it some time because I don't know enough about it right now. I would have to do more research. But it's a really good pick. Thank you very much for recommending it. Olu.io. I hope I pronounced that right, guys. All right, let's see. Next question. This was a painful week. Yes, it was. Even my ARK funds that had been feeling invincible when I tweeted you about it. Yep, I know, man. But just always keep some cash on the sidelines, and I was buying up some ARK. Some of my orders got, because I always set limit orders, try to get a good price. Some of them were going, some of them were getting hit, but yeah, the ARKs were even down, which it's interesting. It's interesting times, especially with all this GameStop saga and stuff like that. It's really stupid, to be honest with you. So my honest opinion is it's stupid. But anyways, this super trend is looking good. 180 days, still way ahead. Overall, it's very bullish. Just very bullish. Look at this, guys. If you're not invested in ARKK, buy some long term. Especially ARKG is going to be the next big one. Look at this coronavirus dip. Nothing. I guess at the time it was something. Back to levels. That's literally moonshotting. It's been moonshotting since March, guys. And even before. So yeah, if you don't know about these, get it. Are you familiar with XL Fleet Corp? I'm not. What's their ticker? Let me know what their ticker is. I'll look it up. Yep, got some RG. Oh, good for you. Good for you. 103. It's not bad. It's just down a little bit. It's 101 right now, but pretty much it's like this. I mean, don't feel bad about that. You know, just hopefully dollar cost average down. You know, just dollar cost average down, and we're going to be golden. No matter, and I had expected, if you guys are following along on the finance blog for the write-ups, um, you will know that I had been talking about almost every day that and putting the warning for the dip and stuff like that. So I'm not surprised about this. And overall, the dip is healthy, so don't be too alarmed about it. There's nothing to panic about. It just does this sometimes, and it's good to keep some money on the sidelines when it's about time for a dip. And also, don't get into some risky options around those times as well. All right, XL, what is this about? Privately Investment Corporation. Vehicle election. Oh, yeah. That's right, I do. I heard about this. Yeah, this is the company that electric electrify. How do I even say that? They make the commercial fleets electric. Yep, I heard about this. This is a really interesting one. Yeah, that's right. I should have put this on the watch list. Thank you a lot. Thanks, Evan. Thanks for pointing this one out. I had totally forgot about this. Man, there's just so many good ones. But yeah, this one ran up quite a lot, didn't it? Another volatile one. Yeah. Super trend up, down. Kept being bearish until here. See, that's a nice indicator. That worked out. Yeah, I would wait. I would wait. I wonder if there's some sort of alert that we can set for the super trend. I personally like the super trend. It's not foolproof, but it just gives you a good indication. I don't always buy on that. Mostly I buy on the different types of resistance and supports and stuff like that. Like this is more of what I would buy on because it's not the Tesla's super trend is still bullish. It's not bearish yet, although it could flip soon, but it's not. So I'm not. It's not like I'm gonna wait for the to become bearish and wait and wait and wait. It's not really my point, but usually I would trade like this. But on something like you had mentioned for XL, I think this is one of those times where I would probably wait to see what's going to happen because it looks like it might be consolidating. Yeah. We might see it break out soon, though. We might see it break out soon, but I would expect this to come down more like that. So I'd probably buy it, or maybe not. It could be, depends on the slope. But we'll see. This one, I'm going to go ahead and put on the watch list. Let's see. Add to watch list, single stock. Yeah. Thanks. Good recommendation. You bought it at 21. You stupidly bought it at 21? I don't think that's stupidly. It's probably bought it a couple days ago, a week ago. It's not so bad. It's not so bad, guys. But you have to wait. As long as you're not in some short-term options. I mean, really, that's going to be the thing right there. Sold a bunch of Tesla at 440. Oof. Yeah, indirectly through the ARK funds. That makes sense. That's what I do. I mean, ARK funds, firstly, like ARKK, and then if you want to get more exposure to Tesla, then you can buy the Tesla stock. But yeah, it's a lot of exposure to Tesla, and I bought some more at 800. I had a limit order at 800. I'm gonna be buying more on Monday because I'm trying to get the 100 shares. Because guys, if you don't know about the covered calls, 13 days away. It'll be even less on Monday. We can sell these covered calls. If you have 100 shares, you can sell the covered calls. The Tesla ones, they're just making money, man. If you don't want to be assigned, you could sell something out about 850 maybe. You know, 13 days to hit 850. Maybe it won't. Maybe you'll get assigned. Who knows? But the premium on this is around $2,200. And if you wait for a day that Tesla just jumps up a little bit, it'll go up. It could be $3,000 or something. I mean, that's if you have 100 shares of Tesla, you literally can make, oh man, just a nice little salary. Probably 3,006 a month if you played it smart. 6,000 a month, maybe 4 to 6,000, possibly more, because you could do it every. Oops, let me change it. 6 days you could also get. 6 days you could do a little bit closer. Yeah, it's going to be not as much. Anyways. But just, you might get a sign, so keep that in mind. But I really want to do that because, why not? Taking a big position in Tesla could be a little bit risky, but I think overall you just wait it out. I think it should be fun. A good buy-in for XL. Well, let me go back. This one is overall, I would say at least midterm. This is not going to be a short-term play. As you can see, it's too volatile. And like I was thinking, turn your super trend on, just the standard super trend 7-3. Wait for this to turn back to the green line, which is bullish. Buy it on the, just watch it closely, buy it on the day it turns bullish. Probably, I would assume it's going to be in here somewhere. And I know it's above the current price. It's around 21 to 22, I would say. Whenever it switches back over to bullish, that's when I would buy it. This is a volatile one, so I would go off of this indicator. And I think it would be somewhere in here. Maybe in a week or so. Just keep an eye out for that. You could buy it now, but the risk is going to be that it falls further because it's in a small bearish or neutral trend right now. So neutral means don't short it. You can just, if it's red on the super trend, don't short it. You could short it if you're sure it's going to go down, but specifically don't have any options because it's going to go sideways. So no matter if it's sideways or no matter if it's down, it's probably going to be a red or a red on the super trend. I'm trying to make this easy for you guys to understand. I don't know what your experience is with all of these things, but you can also let me know about that. So yeah, I would do that. I would wait for the super trend to turn bullish because here it's worked. Turn bullish here, it went up. Sell it if it turns bearish again. Or just sell it whenever you want. Just take the profits, man. Take the profits, dollar cost average the profits too. Here, the super trend, it worked. So yeah, no matter if it's something is sideways or no matter if it's going down, we don't want to be in it. Of course, if it's our long-term position, it doesn't matter. We can be in it to avoid the income tax or anything like that, any strategy you're thinking of. But for the short term and swing trades, we don't want to be in anything. We have better uses for our capital. Leap it all and sell covered calls in that? You mean the poor man covered calls? Yeah. It just depends on what you want to do. If you're talking about XL, I mean, first of all, the Tesla leaps are expensive. It's cheaper than the Tesla, but you can do it. And as far as XL, yeah, I would do something out there for the options. Maybe 111 days. Probably get a 25, maybe even less, to be honest with you. And then go out for the leaps. And remember, leaps is just an option that expires over 1 year. Leaps, you could go a little bit cheaper. You could maybe get 30, but still it's going to be $600. 200 days, you could get 390 at 40, but that's pretty high. It's possible because look, it just pumped up to 35. So it's possible, but this one's going to be risky because it's volatile. The safest thing to do is buy the commons on this. Get 100 shares. It's not expensive. Get 100 shares, sell covered calls. You have $1,900. You can get it right now. Covered call 20 days away. You could sell a covered call 2250. I mean, there's a high chance you're going to get a sign, but if you do the math on that, the premium is $140 that you would collect. And remember, you just get that cash in your account as soon as you execute this order, and you only need to invest $1,900 to get the 100 shares. So if you do the math on this really quick, that's a guaranteed 7%. And if it goes up to your strike of 22.5, well, currently it's 19 and goes to 22.5. Let me do the math on that really quick. That's another 18.5%. So totally, it's going to be 18.5% plus almost 7.5. That's about 25, 26%. And this is if it hits your strike and you're selling the covered calls. So remember, you sell the covered calls, you need 100 shares, cost you $1,900 because it's almost 19 per share. So you got that. You sell the covered calls, you get this premium right here, as you can see, $140 because it's $1.40 per stock. And one contract is 100 stocks. So anyways, that's $140. So you're going to be guaranteed 7%. If it hits your strike, if it goes up, because remember, you're holding the 100 shares, so it's going to appreciate to 22.5 if it hits your strike. You'll be forced to sell at 22.5, but it doesn't matter because you sold it at 22.5. You didn't sold it at 19 as it is right now. So you're still going to make the money from 19 all the way up to 22.5, in which totally that would be about 25%. I mean, it's not bad, guys. It's a decent little money. You could do it further out, but the premiums are lower, as you can see further out. If you don't want to not get assigned and sell the stock, then maybe do it further out or don't do it at all. But I wouldn't see any problem with selling this one, getting assigned, because it's not going to be a long-term play anyways. And I wouldn't be worried about holding this for a long time and worried about the capital gains taxes or the income taxes if it's less than a year. And of course, this is for Americans, speaking for Americans. But yeah, that's pretty much what I think about that. I mean, sell the covered calls could be interesting. I probably would just do that, to be honest with you. Just keep in mind if it falls from 19 falls, then you're going to be stuck holding it. It's all good though. Been selling covered calls on Carnival. Nice. Yeah. Don't want to get exercise for tax. I get it. For sure, for sure. See, that's the thing for me is that's what I was thinking about my Tesla. For example, I had 55 shares of Tesla. I've been holding for a long time. And so if I did sell the covered calls on the Tesla and it gets assigned, I mean, I'm gonna be paying some taxes, that's for sure, because it's gone up a lot since I first bought it. So I'm not sure if I really want to do that because of the taxes. Because I'm not saying don't pay your taxes. Of course you have to pay your taxes, but be smart about it. Don't just waste the money, right? Um, and you be smart about the time that you want to pay the taxes, not just any time. Just sell, and you're always paying taxes, and just don't want to do that. So be smart about your taxes, guys, when you're actually selling these things, because you don't pay taxes unless you sell it. And this is again for America. But anyway, so that's the thing. If you buy some stocks specifically for selling the covered calls or running the wheel strategy, which is selling the puts and then selling the covered calls, um, if you buy some specifically for that, then you're not going to get hit with capital gains taxes very much. It would just be mostly the income on what you're making. So if you're making a couple $1,000s a month from selling Tesla covered calls, then you're just going to pay your taxes on a couple thousand a month, not on the crazy like Tesla went from $100 to $800 or something, and you're pay holding so many shares, and you're going to pay all the capital gains taxes on that. So it would be different. How long have I been investing? I've been investing for a while, and I appreciate the compliment. I feel old sometimes though. But yeah, I have a decent portfolio. I've been investing for a while. Overall, I've been investing since 2011. Mostly, I was investing in cryptocurrencies in 2011. I first got into Bitcoin in 2011. I had a Bitcoin hedge fund in Shanghai during that time when it first started. Boom, the Bitcoin and stuff was really popular earlier on in China, but now it's changed a little bit. So I start to move away from this and um, for my business pivoting more towards the West right now. But yeah, I've been hustling in China, investing for almost a decade. Yeah, a decade actually. It's crazy, but you know, about 10 years to answer your question. I did a lot of forex. I've done a lot of these analysis. Cryptocurrency, I'm very very familiar with. I've been doing cryptocurrency for 10 years. I was in mining a lot, mining bitcoins. I had a few mines in Western China and in Inner Mongolia back in the day. 2017, 2018, something like that. Time flies. But yeah, so invest in the cryptocurrency. So any questions about that, feel free to ask me. Invest in the stocks and um, real estate, and just do a decent amount. Really, just focused on making passive income. I haven't worked for anybody since 2015. Really, before that, I was just investing part time. But since 2015, I've been doing it full time. No matter if it's real estate or stocks or cryptocurrency. And yeah, recently started up this YouTube channel and the new Twitter, pivoting towards all of um, the daily analysis, the journey to a million, trying to keep it fresh for you guys, keep it relevant for you guys. So if you know anybody that this would help, the information that we're talking about, or anybody that wants to join our community, please refer them to me. I would be grateful. Actually, we're almost to 100 subscribers on YouTube, and I've only had the channel for a little more than a week, so I would say that's really awesome, and I really appreciate you guys for supporting so far. I'm really bad at editing, if you haven't noticed, but hey, I'm trying my best. Trying my best during the coronavirus, you know what I mean? Thanks, Evan. I really appreciate that. I see a lot of the YouTube traders or Twitter traders, and there's a few interesting ones. A lot of them try to be funny for me, and not they're not very funny sometimes. Got bored of them. It's just very shallow knowledge. It's like, some recognizable ones for me, or rememberable ones, I should say. They talk about which stock you should buy today, which stock you should buy for next week, like, or even how much money I made or something like this. And it's cool, it's entertaining, and they get a lot of views, and it's all good. But I'm really in this for helping people make legit money, and people can see exactly what my portfolio is, exactly what my trades. I try to be all out in the open for good or for worse. It doesn't matter. Like you guys saw my portfolio, if you're paying attention, you guys saw my portfolio go down decent amount last week. And it's all good through good or through good times or bad times. We're gonna be here, and we're actually gonna make real money, not just paper trading money or pretend money. But really, that's the point. The journey to a million is trying to be entertaining for you guys. Have some sort of goal, which we're gonna do. Which it's almost, if you guys legit follow me, what I'm doing, you could probably double. I mean, by the time if I reach my goal, right? Because I'm about at that point. Um, so we'll see. But I hope you guys follow along. And I'm doing this all for free, obviously. I don't need anything from you guys, but if you need a Webull account, use my link. I get 2 free stocks. You guys get 4 free stocks. That's pretty much it. You know what I mean? But eventually, we'll see where we can take this. And you guys are here at the very beginning, so I really appreciate you guys the most. And feel free to message me on Twitter if I have time. I will answer all of your questions and respond to. I will try to respond to everything. I really will try. And right now, when we're small, at least. But hopefully this does grow pretty fast, because back to what my vision is for the channel and for Twitter is, the Twitter is just to see the trades if you want to follow along, just updates, right? And then the website for the blog posts the analysis, and then the YouTube for just a recap of the analysis and the journey to a million, stuff like that, and for an in-depth dive, not just shallow, not fake, just really, you guys know what I'm saying. I'm just going on and on. I think you guys get the point. Thanks for sharing it, Keith. Appreciate that. Cool. Oh yeah, meet Kevin. Generally, you know what? Was a memorable one, but man, and that was one of the first ones that I really started watching, was Meet Kevin. I really liked him for the real estate too. He was mostly real estate because he was the real estate broker or the agent in Southern California. So I was watching him there because I was getting more into real estate a couple years back, actually. And it was helpful. I mean, it was good. It was entertaining. But as far as deep diving into analysis, the fundamentals, and real world stock picks in situations like selling covered calls, anything theta, go over the gamma, go over the delta, like some deep dive, then this is the niche that I'm trying to fill. But anyways, let's take a look at this stock. RYCEY. RYCEY. Another thing, guys, Rolls Royce. You guys are just throwing out, these awesome recommendations, man. This one's tanking. You gotta go on the week to find the last bull. I mean, Rolls Royce. Yeah, oh, he shifted to stocks as late. I'll have to give him another try. I mean, he's pretty entertaining. I don't know. I need to find my niche. I'm just more of a serious person. Just straight talk investing. That's just it. I just want to do just investing, real world examples, real world trades. Not just buy, like for me, Kevin, just buy like 1,000 shares of Tesla. I mean, that's awesome, and I support that. I was in his Discord, I think. I had talked to him a few times actually. Now that I think about it, but about Bitcoin back in the day. But anyways, I mean, I have to give him a look. But once he started using a bunch of margin, buying all that Tesla, then I was like, and he's making a lot of money, man, and that's great. But that's not really good. That's not the kind of advice that I want to be giving, is going YOLO on Tesla, even though I personally know people that do YOLO on Tesla. Meet Kevin YOLO'd on Tesla. Maybe he's more diversified now. I don't know. I'm just speaking for like half a year ago or whatever, when the last time I watched him. But that's not my style. Number one goal for myself is protect my capital in my portfolio. Don't do any stupid things. Anyways, back to the Rolls Royce. Gets commission on jet engine runtime. I know that. See, that's the first thing that came to my mind, was their engines. Okay, it's a licensing. I get it. I have to read it. It's interesting, but not for me, man. Just looking at this, the day chart. Nah, it's so cheap though, right? Man, this is even one that you would even just short, especially if it hit this 180 day again. I mean, is there any? What's the dividend is like really good or something like that? What's the point here? This is just going down, man. It's been going down since a long time, since $14. Short it. What if it hits 180? Unless there's some big news that's about to come out, you're gonna have to let me know about that without me taking some time to research it. Speaking of dividends, you guys should check out this one. You probably know it. You guys probably know this. This one's good dividends, like 4.5%. It hasn't ever lowered their dividends. This one would be a good guy. This is basically my retirement. I think about this. If I have some extra money, I'll throw it in this. It doesn't go up. Sometimes it goes up. Look at the week. Or even better, look at the month. This is long-term play. It goes up. Just slow. So right now, as you can see from the coronavirus, it's still cheap. If you guys are thinking about retirement, which I'm starting to think about retirement now that I'm getting older, it could be interesting, especially if you like real estate. This is basically, they just invest in commercial real estate projects, and you basically it's like getting a rent roll every month. You get the dividends paid every month. This one's good. But anyways, the Rolls Royce, yeah, not for me. Anyways, another interesting one. That's silver. If you guys are bullish on silver, could be good. TRXC, I don't know if you guys read my report about this. Go down to the day. But yeah, guys, really, thanks for the support so far. I really appreciate it. I don't know if this is the best time to live stream. It took me like 2 hours to figure out this live streaming thing today, not gonna lie. But I don't know if this is the best time. You're gonna have to let me know. I'll do another poll on Twitter, so follow along. If you're not following my Twitter, link in the description, please check that out. And I'll do another poll on Twitter, see a better time. I think I might do another one on Sunday night. Um, to it's closer to when markets opens. It's at nighttime. I think more of you guys would be available. Short squeeze silver. Yeah, I know. I've been hearing it. So this one, I don't know if you guys read my report, but just in case you didn't, I will let you guys know what I think again. This was in my report on Thursday, I think. So back then it was over here at about 24. I was thinking target of about 29, short term 26 and a half. And I had been hearing the same thing that you guys are hearing about the short squeeze. And it's possible and this is SLV is just a iShares Silver Trust. Basically just replicates the performance of silver. Which if the printers are printing more money, which hopefully they are, but hopefully they're not. It's really hard to say about that. Who doesn't want $2,000 from Biden, or what is it, 1,400, or I don't even know. I'll take it. We'll take it, but long term is not good. Short term, the stocks will go up, so we'll have to see about that. But if they keep printing, then of course you're bullish on silver and gold and Bitcoin, by the way. So yeah, I would buy in this box, in this buy zone. I would buy it here because it could keep going up. It's really close to this flipping the super trend. I think on Monday it might flip it, or possibly go down. If it does pull back, then it would be a buy on this support because this. Oh man, I just moved it. Come on, Weeble, lock. How do I lock these? Oh, sorry, I'm stupid. Okay, so yeah, it's been riding this support a couple times. It bounced. Don't take so much consideration of these technical analysis. It's fundamental is the most important. I'm 90% fundamental, 10% technical. The technical is just to get an entry or an exit. And so just look, or a targets or whatever. So looking at it, it's around here or here, I would say, depends on the direction it's going to go. Silver is heavy fundamental. I would say heavy fundamental on silver. Even if you never looked at these, I think it would be fine. And I know a lot of you guys might disagree with that because you've been trading Forex for 6 months and you've heard some people talk about these lines you can draw. If you should Google the meme of the technical analysis meme. Google that. That's how I feel. But anyways, yep, that's the silver. I would do that for sure. Let me check in on the Twitter guys real quick. But I appreciate you guys. I think this is not a good time. It's too early for you guys. I think a lot of people on the West Coast are probably it's too early. But I'm appreciative nonetheless. I'll probably do a nighttime on Sunday, probably around 10 p.m. EST. So I think you guys are probably up looking at your portfolios at that time, thinking of what you're going to do for the next day, because I sure am. And that's the time I write the analysis for the week of what to look at. I might not do that and just do the live stream. It's more or less the same. Anyways, so let's go ahead and go back to these things. The silver, and then this one, the TRXC. This is the robotic surgical company. They're making a robot surgeon that has multiple hands and a camera. And I'm not an expert on this company or on any healthcare equipment companies, but I have some doctor friends, and for sure this is where it's going. I mean, you don't need doctor friends to think about that. I mean, It's just like the driverless cars, where the doctors are all going to be robots in the future, especially the surgeons. For sure, because the robots that they don't make mistakes. Their hands don't shake or whatever. Anyways, so yeah, TRXC, check it out. I first called this one. It was around $1 or $2 down here. It seems like earlier. I called it a couple weeks ago. But sure enough, this one, if you guys want to get into selling covered calls, this is very low capital intensive. It's only cost $300. You can sell covered calls on it, and because it's getting some hype, it's really not bad. You could get into a 20-day to expiration at $4 or whatever. Even at 3.5, like who cares if you get signed? I think at least. So that's $55. 55 divided by about $300. It's about 18% just selling covered calls. Not to mention it's going to appreciate. Hopefully. Sometimes it doesn't though. You just have to hold the bags. But for this one, I kind of like it. Not gonna lie, I would probably wait until this gap is filled. Yeah. Few other interesting companies. SFT. Let's take a look at it. Oh, this one's interesting. It's in a bullish trend, but barely. It might flip soon to bearish. What's this one all about? Insurance Acquisition Corp is a end-to-end auto e-commerce platform. The company provides digital solutions throughout the car ownership. Finding the right car? Shift? That reminds me of what's that other app that I have installed? You can like buy a car online and it delivers it to you. Oh, Vroom. Is it like Vroom? I don't know. I'm gonna have to Google that. I'm gonna have to take a look at these in my own time here. But just looking at the basic chart, I don't know any of the news or any fundamentals. This is just looking at the technical, and it looks pretty flat. It could pop though, so we'd have to. Man, it is just no volume here at all. So something happened. Something happened that I don't know. See if we can find some analysts. Overall, as a buy, price target is $14, $20. Hmm. That's interesting. Based on 7 analysts, who knows who these analysts are? Anyways, that just gives the temperature. Just check the general temperature. Usually, what I like to check. Revenue looks good. Profit. I mean, you guys can check that out. Look at some news. Initiated at price target 13 per share. Catalyst watch. Okay, I will wait on that and check it out. Let me go ahead and add that to my watch list here. That's interesting. Strong sell stocks for January 27th. Anyways, it's a little bit flat, but it could break. Cannot really comment very much. It's discounted though right now. Carvana competitor. Oh, I see. Much better than Carvana. I'll have to check that out for sure. TTCF. Tattooed chef. Evan, you're throwing out a lot of good ones here. Another one that's just so flat. It's interesting. Plant-based food company. Ready to cook bowls? Okay, okay. Sounds like it would be popular in America. Selling covered calls on SFT? Yeah, it's a pretty safe thing to do. Sell the covered calls, wait for it to appreciate. It's smart. When you're never sure, especially of the time, selling covered calls is the way to go. If you're overall bullish, but you're not really sure when it's going to pop, selling covered calls is the way to go if you have enough capital to buy the 100 shares. Also, check out the poor man's covered calls too. You can get the leaps, way out, high delta, and then you could sell the covered call against that. Just look into it. I mean, I think this is a turning out to be a little bit more advanced of a channel than beginners, but it's all good. You guys have, if you guys want me to make a video on poor man cover calls or whatever, I can. It just there's a lot of information out there already. Um, let's see. Yeah, this one's interesting. I mean, could be a good buy. Oh, watching the super trend is interesting. So far, you'd be in the profit if you follow the super trends. So I might consider that. And this is just because I don't know the fundamentals. This is strictly going off technical. Especially if this gap down here is filled. Or here. It's hard to say. This will be a strong support is the 180 day. Very strong. So that's interesting one. Okay, good to know. Real life review. Okay, so you can pick this up at Sam's Club. That's good to know. All right, healthy. Yeah, I mean this is good. Overall, it's good, and especially those are the good ways to find the stocks. And just for example, if you have something in your daily life that you're enjoying, or and you can find something that you like, and you think it's good, and you think it's the stock, and you should check the stock price. That's exactly what you do. That's exactly how you find these things before everybody else. Oh, really? Thanks for letting me know. I probably pushed the hotkey. Is it back? Yeah, okay. Costco, Walmart, others have it. Good to know. I like this one, you know? Sometimes I feel myself as a little bit removed from American things, but because I've been in Shanghai for the last decade, but hey, I'm actually moving back, guys. I'm getting out of here. Another one we can look at. I still think this one is going to be good. Where are you? Yeah, this one fills the gap buying it. I don't know if you guys know about this, but it's a 420 ETF. Probably you've heard about it. This one is bullish overall, and we could be close to legalization. It's just going to go up a bunch if it's decriminalized federally or even legalized. Just imagine. Also, you can look at the clean energy ones. Print is good. You guys should check that out. And I gotta be honest with you, just the tried and true. There's nothing wrong with doing, you know, even options plays on QQQ, the triple Q. That always works out. Am I right? But just consider it. I mean, because it's tech heavy. Um, Doing some options on this, which I was actually had a order that it was not filled, but on Monday I'll be checking it out again. I'm thinking something like I don't remember what I did actually, but I'm pretty sure gonna be 76 day at 3:30 strike. Yep, I think so. And I think I probably put it at 10. So that costs $1,000. There could be some decent growth on this. You could see some decent gains because 330 is not all that far away once it bounces. Because right now we're in a dip. So look at this dip; it's a pretty strong dip too. So as long as it doesn't keep falling, so let's watch that on Monday. and we'll be able to know pre-market in the futures. At least we should have some idea. And then I'll be picking up some calls on this midterm because that's a good chance to make some money, or even on like SMH or SOXX could be good. Those are always scope a lot. So this is the time to be picking some of those things up. Of course, be careful, don't go too big, because it could keep dipping, but it's down. It's down from 330. Yeah, it's decent, 5% or something like that. Um, yeah. So just be careful, see what's going on, but remember, gonna be a good time to start picking up some of these midterm calls, even short term. This literally took 4 days to get down here. It also could be up there in 4 days, maybe longer, maybe a week or two. But I think this could be really good. Go a little bit further out. I got 76 days, but if you want to take a little bit more risk, save some money, could do a month about. Could do something cheaper, but it's also going to cost you. So it just depends. The 330 is only 300 bucks. So we go back out here, and then what I wanted to do, I want to sell this call, by the way. No, I don't want to sell a call. I want to buy this call. But let's see. The 330 one right now is about $1,000. If we can get it for $1,000, and right now it's about $15 out of the money, right? Yeah. So let's just say $15 out of the money, and it's $1,000. So imagine what $15 in the money would be. So 300 is 2,800. So if it pushed 330 and went, it could double, I would say. And if it kept going up, because in the money it's about 80%, and then if it kept going up, I mean, we could see a double or triple easily on this. So I'm very interested in that. I would recommend it, but it's a little bit expensive. You can make it cheaper. You go make it cheaper, just go shorter term. Be careful on the options, guys. Really be careful. If you have any questions, hit me up on my Twitter, link in the description. Calls on a triple average. See, that's a thing. I don't really see a point in that, unless I'm missing something. But I mean, for my long-term holds, I would do the 3x, because I've been doing the 3x since March, because the March lows, and then I just felt like there was no reason to not do the 3x because it was so low. Just dollar cost average and ride that wave up. I mean, it's only down that much in like once every 10 years, you know? So I thought that was a good idea. I might start divesting out of it, but out of the 3x, be careful on those. By the way, if you don't know the risks, please Google that. Because it just to tell you in short, it needs to come up. If it goes down, it needs to go up more to break even, right? But yeah, on the calls, I don't know. You bring up a good question. I wondered about it, to be honest with you. What's the point, then? What's the point? Let's look into this. TQQQ just split too. I got a bunch of these shares now. I got like 1,000 something because of the split. Anyways, I also messed up my cost basis in Webull too. I don't know why. Like TQQQ. Oh, they finally adjusted my cost basis. Really? Where's my cost basis? Oh, it's probably because I'm not logged in right now. That's okay. But anyways, actually, let me just go ahead and do that. Yeah, my cost basis is super messed up. Its cost basis is 121, but that's like before the split or something like that. I don't even know why. And also, I just transferred in from Robinhood, so that was all messed up. But anyways, um, let's look at this. So what were we before? About a month. Man, that's hard to say because up. So it's triple. So up $15 is about the same as up $3, right? All right. So I mean that's going to cost you $710, and that's 27 days. to break even percent is 12.8%. So it's triple, right? So it's $5. Okay. Let's keep that saved on the bottom here. Let's go down here, 27 days. This is a really good question, thanks. So it's $5 out of the money. So this should be, in theory, $15 because it's times 3. So $15 out of the money, it should be $330. So $330 is going to cost us, it's a lot cheaper. It's 370 and it was 12% to break even. That's 6% to break even. What am I missing? I'm missing something. But I don't know. Like, I also something to consider is the volume on the triple Q, the leveraged 3x options. The volume is probably not as much as just the normal triple Q. So I don't know if I would do that. I don't know if I would do that just because of the volume. And so far I haven't. Don't really see a point. But there might be something I'm missing. I mean, obviously the normal Q is cheaper. And the strike, maybe it's 3? This could be quantity 3 though. That would make more sense. That would be about the same, but I went $15 out of the money versus $5 out of the money. To be honest with you, I'm going to have to look more into that. But so far, I just stayed away from that, the 3x options, because just the volume I've considered before. Yeah, I never tried Fidelity. I never tried Fidelity, but Robinhood and Webull, pretty much for me. I was looking for a new one. I mean, I might try Schwab or Fidelity at some time, but I don't know. But yeah, I checked out the options and something, and I don't know about that. That's a good question though. Yeah, I didn't even realize that Webull didn't have fractional. I never even used fractional, to be honest with you, on Robinhood, even though I had it, because I just liked keeping it clean, to be honest with you. But anyways, okay, it's good. It's good stuff, guys. I really appreciate that. Looks like we didn't really do any portfolio review, but thanks for all of the good conversations, guys. And be careful out there. Let's see what happens in the pre-markets on what's called Sunday night. We'll be able to start seeing it, and let's be careful out there, though. Number one goal should be protect capital. I always believe that. Protect your capital. See ya, Evan. Gotta go. Nice talking to you. Thanks for all the good recommendations. See you next time, man. Protect your capital first, and then second is to make gains. I really believe that. Don't go so big on these option positions. If you follow along on my journey, you can see that I'm taking on a lot of the option positions. I'm going pretty small so far, and I really like selling covered calls because you're gonna make good money selling covered calls. And if you're bullish on something and you want to hold the stocks anyways, if you want to hold 100 of whatever stock, and if you're gonna do that anyways, you might as well sell covered calls, in my opinion, because that's just gonna be extra income that you can make. Of course, there's other things to consider, but that's just the basic. Anyways, guys, appreciate it again. Leave me any comments on this video. Hit me up on Twitter, please, if you have any questions, and give me some feedback overall. I'll try to make this a weekly thing. I think this time is not really good for people on the West Coast, so we'll probably have to adjust the time anyways. It's not really a good time for me too anyways, but so probably do on Mondays. I think probably, sorry, not Mondays, Sunday nights, I think around 11 Eastern Standard or 8, I think that's 8 Pacific Standard. I think something like that would be, PM that is. I think something like that would be better. People are checking out their portfolios and stuff like that. But anyways, guys, I appreciate it. Stay in touch, everybody, and if you're not subscribed, please subscribe. Share my content with anybody. We're almost to 100 subs on YouTube. I really appreciate you guys.